Hello everybody, I'm John. This is Strategic Investing and we have a great earnings report, phenomenal earnings report to go over from Xtract One here. I'm going to kind of go over basically the general numbers here, things that I look at right off the bat. Then we'll really dive into the report, talk about some of the things that they mentioned in the call. So let's jump right into it here. First of all, what I am looking for right off the bat, platform, specifically platform backlog, platform revenue, and signed agreements pending to give us kind of the overall bookings backlog here. Right here at the top, you can see that platform backlog has increased 32% quarter over quarter. So now we're at about 4.1 million. Platform revenue here, 105%. We actually more than doubled last quarter's revenue, going from about $800,000 to over 1.6 million. And signed agreements pending also growing 32%. Getting over 10 million now in signed agreements pending. So if you kind of add the backlog and the signed agreements pending together to give us kind of the total, what they're calling bookings, we're at about 15 million now. So setting up some phenomenal growth here for Xtract One. All of that 10 million, going to flow down into backlog, into revenue. And Karen actually said on the call in regards to that 10.4 million in signed agreements pending that they expect to have most of that installed within the next 12 months. So most of that 10 million we should see, again, depending on whether they're upfront or subscription contracts, most of that 10 million we should see over the next 12 months, over the next year, come down into revenue and backlog. So that should be a very nice boost there to the revenue over the next 12 months, along with all of the other contracts that they have already signed in the next quarter, or the current quarter, I guess, that we're in, as well as over, the next 3 quarters that we go through as those 12 months go on. So really nice growth here. And if we move down just a little further into the financials here, looking at expenses did grow, but expenses actually didn't grow nearly as fast as revenue did. And Karen, this is another thing that she mentioned on the call. She talked about how expenses would continue to probably increase, makes sense as they're growing, as they're continuing to sell more. They're going to need to pay more for sales, for marketing, for just, the hardware to sell it. She said that, while expenses will continue to increase, she expects them to definitely be outpaced by the growth in revenue. And that is actually what we're seeing in the quarter here. Let me jump over to some of my charts here. So you're looking at blue is revenue growth, the percentage at which it grew, and red is the percentage at which expenses grew. And you can actually see the last 3 quarters, expenses were falling actually. Expenses, went down. But just in the last quarter, we did see them tick up. Now, they only went up by about 10%, whereas again, revenue increased by over 100%. So I am perfectly happy with expenses increasing 10% if we get 100% revenue growth out of that. That's definitely going to be more than fine anytime you want to do that. And what that is also contributing to, one of the kind of metrics that I started tracking in, you guys may remember in the last couple of earnings, is this platform revenue generated per dollar of expenses. Okay, so this is how much revenue they generate per dollar they spend in expenses. And you can see we have a huge increase in this last quarter here, Q4 of 2023. You can see Q3, we were at about 19 cents per dollar, 19 cents of revenue per dollar of expenses. And it was, growing very steadily, but we've actually even further increased the rate at which it is growing, and now we're at about 35 cents per dollar of expenses. And again, the reason we're tracking this is because in order to get to break even, in order to switch over to profitability, they have to make at least $1 of revenue for every dollar of expenses. So this is kind of a good way to track their progress towards profitability, and it looks like they're doing very nicely on that way to profitability there. And just to jump over to the chart next to it here, if we're looking at total backlog, again, including the signed agreements pending, you can see that we're right about that 15 million there that I was talking about earlier. If you take those signed agreements pending, add them to the current backlog to get that kind of bookings that they're calling here in the earnings, That's at about 15 million right now. Now, keep in mind, these earnings likely do not include, I'm almost 100% sure that they do not include that 5.1 million US dollars, which is actually about 7 million Canadian, right? Along with probably the other international contracts they got. We know that the VA, the Veteran Affairs, that contract was announced after this quarter had already ended. We also know the deal with they signed with the Association of Professional Baseball was also after. So those contracts are going to be added on. All of the rest of the contracts that they got in the current quarter that we're in. So by the time we get to the next report here, we could very well be looking at over $20 million here in the total backlog. Again, that's the signed agreements pending and the actual installed backlog. You know, even if you just add that 5.1 million US dollar, right? So that's another basically 7 million Canadian. That alone puts us at about 22 million. So this is extremely exciting. We're looking at a ton of growth over the next several quarters. And we already have a lot of that we know about just from the contracts that they've announced. And so one thing actually that I do want to talk about here, what, you know, kind of the main worry for a lot of Xtract One investors has been, maybe even a lot of people kind of looking at Xtract One, the reason that they haven't put any money in is the cash position, right? And, you know, we've heard Peter talk about not having to raise capital and things like that. There's actually something very interesting that happened with the cash position in this last quarter. Their cash position actually only dropped by about $200,000 from the last quarter. Now, to me, when I saw that, I was like, that's really weird, because when I looked at the income statement showed at least cash expenses of around 2.7 million. I was kind of confused. How did they only use $200,000 in cash? How do they still have that $8.3 million in cash? It should be more down in the range of 6 million or so, right? But then I realized if you look at the cash flow statement a little bit closer, you can see that they've actually, from the last quarter, received another $2.2 million or so of cash received from financing activities. Now, we know that they haven't announced any financing activities. They haven't, you know, announced that they're issuing more shares or anything like that. But we also know that they do, or they have issued warrants, right? And they also have stock options that they've issued to, you know, employees and things like that, right? So I took a look at those, and we actually did have exercises of warrants, and we did have exercises of stock options. Keep in mind that over the course of this quarter, remember this quarter was May, June, July. This is a quarter where for pretty much most of the quarter, the stock was above 80 cents a share Canadian, right? So this was a pretty high level for the stock, and we also had a very steep peak, a very kind of quick rise in the stock. You know, there might have been a lot of people that were like, oh, this is a good time to take some cash if I'd been looking to take some cash. Good time to maybe exercise some of those options. So that's likely kind of a lot of what's going on here. Some of those options exercises also may have been scheduled. You know, we just don't know. The options, though, only accounted, I think, for about 400,000 or 500,000, though, of the actual financing. And the rest of it was a large chunk of warrants that were exercised. Now, these were not warrants that were exercised, it looks like, from Madison Square Garden, just from kind of the data that we're seeing here. It looks like these were warrants from the previous capital raise that they did. It's a little confusing here, but basically on the document on the right here, that is from April. You see there that they have about 11 million warrants at the 75-cent exercise price. If you look over to the left where that arrow points to, that is the amount that we now have as of July 31st. That difference there is, again, what that next arrow points to. That difference is about 2.6 million. So what does this all mean? This all means that basically they almost didn't burn any cash in the last quarter. They really only used technically about 200,000 or so in cash, and they still have about $8.3 million in cash left. And this is very likely what's contributing to, you know, some of the comments Peter has made about raising capital, or actually not having to raise capital. And this kind of brings up an interesting scenario that I've actually been thinking about a little bit lately, and that is that Madison Square Garden has about 31 million warrants here, okay? And if we do ever get to the point where Xtract One needs a few million dollars or so just to kind of really bump them up to the point where they're going to be good, they're going to be profitable, then it's almost in Madison Square Garden's best interest. Instead of, Xtract One going and looking to raise more capital, that's going to dilute Madison Square Garden's position, right? Which Madison Square Garden likely doesn't want. None of us want any more dilution, right? But if Madison Square Garden can just go and say, hey, you know what, Xtract One, it's okay. We'll just exercise, 3 or 4 million of the 31 million warrants that we have. We'll get you a few $1 million in cash. You're good to go. We'll just retain those shares. Our position stays the same. You get your cash and everybody wins, right? And that's a scenario that is, after seeing this, seeming more and more likely to me, right? If that, I'm not saying that's going to happen. In fact, I think for the first time since I've owned the stock, I think we're looking at a greater than 50% chance that they won't have to raise cash. And that's something that, is a new thing for me with Xtract One, and that's a good thing, right? But all I'm saying is, in the scenario that they do want cash, even if it's not for something that they need, even if they're like, hey, we need to really boost our manufacturing again because the demand is so big and we need a little extra cash to do that, they do have that avenue there. And that's just something to think about, that even if they do need some more cash, they might not actually have to raise it because of, the position that they're in with the warrants. And again, if the stock continues to rise, a lot of the warrants that are currently out there that might be expiring over the next, several months or so, over the next year or two, might actually be in the money, right? They might actually become exercisable as the stock rises. And those warrants could also be exercised, giving Xtract One even more cash. So really, I think they're actually sitting in a much better cash position than anybody was kind of thinking right now. And so this quarter here really is even better than the revenue growth, the backlog growth, the signed agreements pending. All of that growth is phenomenal, right? Keeping expenses within, only 10% growth. But you add on to that this cash position that they're building, the ability, the potential for them to, get influxes of cash from these warrants without having to do further dilution. Now, again, okay, it does dilute some with the warrants, sure. But that was kind of something that was already accounted for. We're not looking at a new round of financing or anything like that. So overall, really just a phenomenal report here from a revenue backlog growth position, from a cash position, from just, I love to hear that they're doubling their manufacturing capacity and Peter talking about then doubling it again next year. Really, it just seems like they're firing on all cylinders here, and we're looking at a phenomenal upcoming year and years to go in the future for Xtract One. So I'd love to hear in the comments below what you guys thought of these earnings. If there's anything that you think that I missed or should have touched on, definitely let me know in the comments below. Other than that, I will see you guys next time. Have a great day.